At Andreessen Horowitz, I had the opportunity to meet with hundreds of stablecoin companies. I realized that it wasn't happening fast enough, and a lot of the infrastructure that needed to be built to make stablecoins a better payment rail hadn't been developed. So hundreds of millions of dollars of USDC were lost. Crypto really grew up around trading. These companies want their own stablecoin because they want more control. The easiest way to do payments with agents is to use stablecoins.
All right, guys, we are back at another episode of Wrap Up Podcast today. I'm joined by Sam Broner, the founder of Better Money Company, former investor at A16Z, and previously an engineer at Microsoft. Now he's building what he calls stablecoin clearinghouse, a new layer for how money moves. Sam, welcome to the podcast.
I appreciate it. Glad to be here. Thank you for having me on.
Sam, you were investing at A16Z, one of the biggest VC firms in the world, investing in different kinds of companies, including fintechs and crypto ones. What made you to leave A16Z and start your own company?
Yeah, that's a great question. I appreciate it. Look, I always have loved building software, and I've loved building products. I think it's such an amazing privilege to be able to build things that make people's lives better.
Okay.
At Andreessen Horowitz, I had the opportunity to meet with hundreds of stablecoin companies, meet some of great founders, work with large-scale fintechs, work with payments companies that were considering transitioning to using stablecoins to improve the quality of their products. And I realized that it wasn't happening fast enough, and a lot of the infrastructure that needed to be built to make stablecoins a better payment rail also hadn't been developed. So love that job, but felt like it was the right time for me to make a difference in how stablecoins are used for everyday payments.
And here's another question. What was the hardest part from moving from investment to becoming a founder? You are still making a transition. So what was the hardest part?
That's a good question. It's my first time being asked that question, just so you know, Sam. So the hardest part, it felt very natural, I have to admit. I always was the type of investor who found I learned best by doing. So nights and weekends was often time for me to experiment with technology. I like getting my hands dirty with building the products that ultimately shape how the world changes. And so once I shifted to being full time on the Better Money Company, wrapped up the fundraising round, it wasn't necessarily hard as much as exciting, and you have the pressure of delivering on building a product that changes how people do things.
Right. And, one interesting question, because in the past you were an engineer. So do you code yourself?
I do. Not as much as I'd like recently. Today for the Better Money Company clearinghouse, which I'm sure we'll get further into,
of course,
we have a challenging problem of moving money between issuers and facilitating payments on behalf of the customers of the clearinghouse.
Okay.
And so there's a lot that needs to be done right to make that happen as efficiently and effectively as possible. I wrote some of the early code. I think I made the initial repo, but we're growing our team, and I spend less time with hands on keyboard now.
Right. Now, tell me, what are you guys building at the Better Money Company? What makes you different from other stablecoin companies in the market? Because I'm speaking to so many founders, and more or less they are building similar stuff. So how's your product different?
Yeah. So a lot of the infrastructure for stablecoins today relies on trading. It's really built for the world of trading infrastructure, because that's where so much of the usage of crypto has been for the last decade. How do you buy and sell assets that are priced on a 24/7 market? That's great. And I'm so impressed by the strides that we in crypto have all made over the last years. But ultimately for payments, people expect to get a fixed price for an asset, and they expect a fixed delivery time. And so when I'm talking to traditional payments companies that are considering their stablecoin strategy, it feels to them as if I were saying, why don't you sell your Wells Fargo dollars to buy Bank of America dollars? That's intuitively not how bank transfers work. We know it's actually a transfer, a send. And they want stablecoins to work like that, where stablecoins are not priced to market. Instead, they're send swap according to rules that we can provide with our clearinghouse. So what is a clearinghouse? A clearinghouse connects the issuers and allows our customers to get one-to-one pricing when they use stablecoins in their payments products.
Can you give me one example? I'm trying to wrap my head around it. If you could give me one example, one use case, how I could potentially use your product.
Oh, sure. Yeah, yeah. So let's say you run a neobank product
Let's
and
say.
you have a stablecoin that you've issued. Well, how do you go from your custom stablecoin to USDC?
Okay.
Today, you might build out a whole liquidity platform. Maybe you work with your issuance platform to facilitate this. Well, we can give you a much wider array of options and give you
Okay.
further connectivity. So you would say, I'm sending your name's Sam. Let's say you started Sam's Neobank.
Sure.
You send Sam's stablecoin, and you, Sam, want back a different stablecoin. We can do that swap for you in a way where you've got guaranteed pricing, a compliant source of funds, and you know when that transaction is going to settle. You could then build that into your product in a way where you can give more reliable guarantees and scale your operations for your end consumers.
I see. And who's your ideal customer? Like, if you describe the ideal customer profile, who would that be?
Yeah, so we can service many types of customers. Often it's neobanks, banks. Banks have a huge problem when they build their deposit tokens where it's hard to have liquidity for a deposit token. We can integrate deposit tokens or tokenized deposits into the clearinghouse as well. Anything that's Genius Act compliant and has a known and safe form of reserve capital, we can facilitate those sort of swaps, bridges, and sends through the clearinghouse.
Right.
So these sort of neobanky money apps, banks, payment companies, even large enterprises that are considering how can we make our product better by integrating stablecoins, we can help service them as well.
I see. And let's say I am one of your customers, neobank, as you said. So what changed, for example, when I integrate you guys? And do you guys have any other competitors in the market?
It's a great question. So what changes is exactly this market pricing question. Today, if you want to sell a low liquidity stablecoin and turn it into a more widely used stablecoin so that you can do better integrations, you might get a lot of slippage on that transaction. We've heard from some of our customers that when they need to move between stablecoins, they might face 10, 15, 20 basis points of slippage depending on the venue that they're on.
Okay.
I know that sounds like a big number. It is a big number.
It is a big number.
Yeah, and that's because it's just very hard to move $100,000 of a stablecoin that doesn't have a ton of liquidity on the common venues. There just isn't the liquidity to support that, and I'm not sure that you can create enough liquidity to support that at scale. The market just doesn't have room to price those assets efficiently. So that's why we've gone to all of these issuance platforms to be able to secure reliable pricing for lower liquidity stables.
Here's the question. Tell me, you said it's right. Let's say I am a provider. It could be very difficult for me to find liquidity, but how do you guys manage that? I mean,
so
you said, we go and speak to issuers, but I mean, how do you ensure that you have that liquidity at the right moment?
Yes, this is where we've built out these partnerships with the issuance platforms. If you look at our announcement when we came out of stealth, you'll see that we're working with Paxos and Bridge, MoonPay, Agora, M0, Frax, Braille. We can support even more Genius Act stablecoins. And we did that by going to those issuance platforms or those issuers and building the relationships to be able to do this.
I see. And Sam, when we talk about stablecoin and payments in general, there are different layers, there are compliance and the liquidity routing, as you said. So where do you guys sit in this stack?
Yeah, so we're often sitting in an infrastructure layer, building core financial infrastructure, and we will we're not really end user facing often. We're typically wrapped inside of another application. And companies either use us in a way where they're directly facilitating B2B payments or where we're helping them manage their treasury so that they can be more responsive to their customers' needs.
And Sam, did you find out about this issue while you were speaking to companies that come to A16Z? Because again, I'm wondering why other companies have not built this yet? I mean, if it's so obvious, why haven't they done that?
Yeah, I mean, it came up when I was at the Boston Fed. Like, so I was at the Boston Fed briefly on their stablecoin initiative. This is a
Okay.
very Fed-centric perspective. How do
Okay.
you get the singleness of money that we all rely on? When you go buy something at a store or get paid by your employer, no one asks where the funds are sitting. We have this we have this mental model where I can swipe my credit card, and whether the funds sit at Chase Bank or Ridgewood Savings Bank or Kentucky First Mutual Bank,
Yeah.
the swipe will go through.
Yeah.
And that's because over the last 115 years, the US monetary system has put in the hard work to make sure that these banks and other deposit holders are interoperable.
Okay.
Now, back to like, why hasn't this been built yet? Well, crypto really grew up around trading. There's this really intense focus on pricing assets and creating interoperability by using markets. But that's
Okay.
not how the singleness of money was created in the US banking system.
Okay.
It was actually created by building great oversight, interoperability systems, and a stronger Fed. We're hoping to recreate those systems by building a stablecoin clearinghouse that allows people to know they can get guaranteed pricing, even if they're on a lower liquidity stablecoin.
I see. That's a very interesting concept, by the way. If I understand correctly, I've never been to the US. I'm just trying to
Ah,
understand that. Honestly, I've never been to the US. So in the US, I know there is a clearing house. And if I understand correctly, that's regulated by the government. So it's sort of like government organization, if I understand that correctly. Is that correct?
the clearinghouse, like is a private company, but there's definitely a public-private partnership to make sure that there's good and safe rules. Ultimately, a clearinghouse, the first historical clearinghouses were places for people to meet up. There's
All
a
right.
how do you know as a bank that you can get connected to every other bank? One way
Okay.
to do it is to send like a courier that goes to
Mhm.
each bank and checks pricing. The
Yeah.
other is to set a specific venue where everyone's going to meet up so that if you go to that venue, you can get best pricing across the various banks that are connected there.
I
That's
see.
what we're doing with our clearinghouse. We're making sure that if you are someone who wants to do payments with stablecoins, you can show up to one venue and get guaranteed pricing no matter which issuer you end up working with.
And how do you ensure that you don't become another silo in this? Because again, with stable coins, everyone is trying to remove the friction. We want stable coins because we don't want friction. We want everything to settle fast and seamless. So how do you ensure that you don't become that silo, that friction in the middle?
Yeah, I mean, it's really important to us that we're neutral infrastructure.
Okay.
And that's part of why we don't issue our own stablecoin. We're taking a very partnership led approach to building the product where we need to make sure that we're not adding undue friction. We're in fact making it easy for everyone to access any stablecoin. And we can work across issuance platforms in that way. That's why, in large part, we were able to go to our list of member issuers and, who I just mentioned, but we can work with and across Paxos, Bridge, MoonPay, Agora, M0, Frax, Braille, because we are this neutral infrastructure.
How many of them do you have? How many integrations do you have at the moment?
We support 7 issuance platforms. We've got a handful of what I'd call sponsored stablecoins, so custom stablecoins that are issued, and then we support even more Genius Act compliant stablecoins in addition to that.
Sam, what do you think why stablecoins started to accelerate that fast in the last couple of years? I mean, is it simply because of the regulation, or that there is much more underneath?
I think that the reason stablecoins initially appealed to me as an engineer, someone who had mostly built large scale software systems,
Okay,
is because stablecoins are internet native money that you can send anywhere, you can send them quickly, and you can program them in a way that you just can't program legacy money.
all right.
That's the initial. But then 7 months ago, when the Genius Act was signed with bipartisan support, that gave larger enterprises, payments companies, fintechs and banks the confidence to be much more aggressive in their building. And so we're 7 months out from the Genius Act getting signed. And of course, we keep getting more and more regulatory clarity on top of that. But 7 months is breakneck pace for these businesses.
Right.
They are working very quickly to add stablecoins to their product suite so that they can offer faster, cheaper, better payments.
And Sam, do you guys need to be regulated, or you just info provider and you don't touch any regulation and compliance stuff?
So today we work with BitGo, who's one of our great partners, and operate on their licensure. They've been fantastic, and they help us provide the highest quality, of service and facilitate payment in a way that's safe and reliable.
All right, I see. And the most interesting question, I think, to everyone: how do you make money, especially to your investors, right? they also want to know how you make money.
Well, we have volume-based pricing. It's hard to move between one stablecoin and another, and so we do volume-based pricing to make sure that we can offer a fixed rate price to go from stable to stable.
I see. And Sam, you mentioned that you previously worked on, let's say, central bank digital currencies, right? So I wanted to ask this question. So what did that experience change in how you think about stablecoins? You think, which one is better, basically, in your opinion? You thought, oh, I see this. That's why I believe stablecoins are better than, let's say, CBDCs.
Oh, man, there's a lot to unpack there. With the Fed is a very interesting place to work. It's an extremely academic organization. Okay. They're very focused on studying the problem and making sure that they do right by the people they serve. And I think very highly of the Fed. With that said, ultimately, CBDCs have been de-emphasized because stablecoins now are very fast. They're very cheap to use. And it's easy to let the market figure out what the best solution is. So I expect that we're going to see stablecoins continue to be the preferred way to do digital money movement.
Okay.
The biggest thing that I took away, though, is that from my time at the Fed, is that there are so many types of businesses, including banks, payments companies, and financial institutions, that are fundamentally frustrated with how money moves today. It often involves paperwork. It clearly takes days, sometimes a week to settle. And it's very hard to do reconciliation, business planning, liquidity management on a store of value that takes that long to settle. And there's a lot of good reasons for us to be offering, for all of these institutions to be adopting stablecoins.
Very interesting concept, because I heard a few other things. I will not go deep in that topic, but I think there are many, as you said, many aspects to this, not only a few. But I want to go back to your experience as a founder, and I want to understand, what did you believe to one thing in stablecoins as an investor while you were investing that you don't believe now as a founder?
Oh, that's very interesting. As a founder, it is very clear that there's a lot to build to solve people's problems.
Right.
A point solution, so a solution that just solves one key piece of friction, works when the source of that friction is enough. You need to really solve one pain point in order to deliver a product and therefore business model and therefore company that can grow and succeed over time. And as a investor, I think it's a nice thing about an investor is that you get to say, hey, I think that should exist, and I think it could solve a pain point.
All right.
But as a founder, you need to say it does solve a pain point, and I know what that pain point is. It's the difference between making a lot of bets and making one bet. And that's why this was the company that I felt best suited to build, and the reason why I felt this real urgency to build it today. We're seeing this huge growth in custom stablecoins. And so now is the time to make sure that custom stablecoins and self-issued stablecoins can be redeemable, swappable, sendable at the one-to-one value.
But again, we know that the market is it's led by two biggest players. It's Tether and USDC. I sometimes wonder, why do we need so many stablecoins, literally everyone launching? Do you see in the near future most of them dying out, or do you believe it will, that smaller companies will also take traction and get adoption?
I definitely see that there's going to be many stablecoins. There's going to be many stablecoins for a number of reasons.
Okay.
And then so let me share that. And then I've got one point to make on the larger stablecoins that are already out
Okay.
there. We see every week multiple RFPs for custom stablecoins from large companies that you would have heard of. These companies want their own stablecoin because they want more control, because they want to have a brand around it. Potentially, want to capture the economics of the issued stablecoins, and they want to tie the custom stablecoin or their self-issued stablecoin
Okay.
deeply into their product in a way that they can't with a USDC or a USDT.
I see.
There's actually an interesting example of this past week where, unfortunately, Drift was hacked. Many millions of or hundreds of millions of dollars of USDC were lost. And if Drift had had the ability to freeze those funds, they might have been able to prevent some of the downside of that hack. It's a reason why serious businesses, serious fintechs should consider having much more control over the stablecoins that they create and work with. This is just one of the reasons that people want their own stablecoin. Now, for markets, so buying and selling assets, it's helpful to have a single pair. You want to know that you can buy Bitcoin on the venue with the deepest pricing. And today, that's with the large stablecoin issuers like a USDC or USDT. But for the payment scenario, that's not as necessary. You should be able to go and do a payment even from a smaller cap stablecoin that's being used within, let's call it again, Sam's fintech, and there, the liquidity concern around market making is way lower. And we provide the service of integrating Sam stablecoin into the larger payments world.
I think in that case, I see like basically everyone becoming sort of their own bank, right? To some sense. And I also want to understand like who controls this money stack, because why banks were there, because historically they had deposits, they controlled basically distribution of the funds. But in a world of stable coins and basically in a world of AI, who do you think actually controls the money?
For stablecoins, the reserves are well understood to be high quality liquid assets. So the safest, easiest to regulate type of reserve capital, you can think of a stablecoin as being a dollar share in a narrow bank. And that makes it much easier to oversee and regulate. So who controls the money? Well, I think the question is who controls the reserves, and that's the issuance platform, as we see in the guidance from Genius.
I see. Issuance platforms. Okay, that makes clear for me particularly. Do you think in this world, crypto native companies have edge versus, let's say, more traditional companies, more traditional payment platforms, fintechs, and others?
Whoever builds the product that customers want first is going to have the edge. I think that crypto companies are much more comfortable with the concept of using stablecoins. But as we've seen over the last 7 months, many large enterprises have also realized that having a custom stablecoin or integrating stablecoins is a great choice for them as well. And so it's going to come down to who has the product mindset that allows them to integrate stablecoins and deliver a product that's cheaper and faster and better for the customer scenario.
I see. And I also have to ask this question because everyone is talking about agentic commerce and AI agents making payments. Do you also believe that stable coins are basically the currency for AI agents natively because they can program it, they can use it?
I wrote a piece on this called Tourists in the Bazaar. And I have a ton to say about it. The question for agents is twofold. One is, what's the best way to pay in the abstract? In the final state, what's the best way to pay? And the second is, what's available today? And today, the easiest way to do payments with agents, the most programmable, the easiest to get started with immediately, is to use stablecoins because
Mm-hmm.
they're 24/7. It's an atomic transaction, which means that if you exchange goods and services for money,
All right.
you can do that in a direct swap. There's no credit relationship.
True.
Over time, I think we'll see more diversity in how agents pay because we'll have stronger frameworks for how we give agents credit or how we move agents out of the flow of funds and have a net 30 settlement that happens out of band between the person who directs the agent and the merchant. All that is to say, we're seeing a ton of experimentation in agentic payments, and a lot of it's happening in stablecoins because of just how much easier it is for an entrepreneur or a developer to get up and going with them.
And as a founder, what some most critical news are you watching these days? Because I want also other founders to understand where the market is moving, what they should track. Because again, on one hand, you were an investor, you were watching a lot of development as well as the news. Now you are a founder, you must be watching some news that's very close to your industry, to your company.
The most important news is the news of what our customers want.
Okay.
I mean, that's a sort of an easy answer because fundamentally the news cycle doesn't always or doesn't often impact the purchase decision of people who want to build
Okay.
better stablecoin products. And so the number one thing I look for is who needs a better payments product and can we help them?
Right.
Besides that, I love being on Twitter. I think, you do a great job with news. There's many people out there who are doing a great job consolidating the news from the market
Right.
and making sure that I stay up to date.
Okay, you said whatever your customers are saying, you are watching this, but
Yeah.
okay, let me paraphrase that. What developments are you watching? What I meant by this is like, for example, there is Genius Act. There are some other news, regulatory news special that are coming out. What would you recommend to the market as well to watch out if you are building in crypto industry, in stablecoin industry? Let me put this
Yeah,
way.
yeah. But I really do mean, I really do think the key thing to watch out for is what are payments companies, banks, fintechs saying they're doing with stablecoins and what are their
Okay.
use cases?
All right.
The
I see. I see.
the single biggest driver of the stablecoin landscape is a large payments company going to make their product better by integrating stablecoins into their platform? Genius is really important and it's developing, but a lot of the key clarity from Genius happened in July when the Genius Act passed. And
Okay.
now the rulemaking continues to be interesting, and I'm excited that there's bipartisan support for it and that we're going to continue to get clearer rules of the road. But the biggest thing to watch for is what are businesses building with stablecoins and how does it impact their customers?
Right. And Sam, this is my last question. What should we expect from the Better Money Company in the next 6 to 1 year, 6 months to 1 year?
We're going to be moving more volume and we're going to offer an even better product as we make it much, much easier to go from one stablecoin to another using the Better Money Company clearinghouse.
Sam, thank you for coming on the show. It was a great conversation. I learned a lot, and thank you for your time.
Thank you. Good to see you.